There is a table that never closes. You didn't build it, you didn't set the odds. But the moment you signed that policy, you sat down to play, and you've been playing every single month since, without ever seeing the numbers written on the other side of the felt. Somewhere in a building you'll never visit, a room full of people who are very good at math has already calculated something about you. Not your name, your probability. The chance you'll get sick. The chance your roof will fail. The chance you'll die in a given year, broken down to the decimal point. They didn't guess, they never guess. That's the part almost nobody says out loud. Insurance isn't protection first, it's a wager, priced by people who have already run the numbers 1,000 times before you even read the contract. And here's the part that should sit heavy in your chest for a second. The game is not neutral. It was never designed to be. A casino doesn't lose money by accident, and an insurer doesn't stay in business by accident either. The house edge isn't a rumor, it's a structure. Every premium you pay is built from a formula that guarantees over enough people and enough years the table wins, not through fraud. Through arithmetic, the dealer doesn't need to cheat when the math already does the work for them. Now think about your own policy for a moment. The one sitting quietly in a drawer, untouched since the day you signed it. You probably feel safe when you think about it. That feeling is the most expensive illusion in personal finance, because a policy that hasn't changed in 5 years hasn't been protecting you for 5 years. It's been quietly falling behind, one calendar page at a time while you weren't looking. Here's the mechanism, and it moves in silence. Prices rise every year. Homes cost more to rebuild. Medical care costs more to deliver. The value of a dollar shrinks a little more with each cycle of the calendar. But your coverage limit, the number typed into your contract, doesn't move unless you move it. It sits frozen while the cost of your actual life keeps climbing around it. That gap between what's written on the page and what reality now costs has a name in the industry, and they rarely say it to your face. The protection gap. It doesn't arrive with a warning. It arrives the day you file a claim and discover the number that once felt like more than enough now covers half of what you need. Picture the moment, not the paperwork, the actual moment, a phone call after the worst week of someone's life. A contractor's estimate that's nearly double what the policy pays out. A family standing in a driveway, doing math they never expected to do, realizing the number they trusted for a decade quietly stopped being true years ago. Nobody sent a letter. Nobody rang an alarm, the gap just grew in the dark while life went on as normal. The same silent drift happens in a different room, with a different kind of paperwork. Medical costs don't rise at the same gentle pace as everything else. They climb faster year after year, often outrunning the general cost of living by a wide margin. A coverage limit that felt generous a decade ago can quietly become inadequate for a single serious diagnosis today, not because anything about the policy failed, but because the world underneath it kept moving and the number never got the message. The table doesn't just sit still in one corner of your life, it sits still everywhere you stop checking. This is where the second layer of math becomes impossible to ignore. In physics, there's a law that governs everything left alone, a slow drift toward disorder unless energy is deliberately put back in. Leave a structure untouched and it doesn't stay the same. It corrodes, coverage behaves the same way. It isn't a fortress you build once. It's a hull that takes on water the moment you stop bailing. Every year without a review is another quiet inch of water on the floor, invisible from the deck, patient below it. And the mathematics of the wager compound this in a direction most people never calculate. Insurers aren't pricing your risk today. They're pricing a pool of millions of people, averaged, smoothed, and adjusted continuously with new data streaming in from every claim filed anywhere in the system. Your premium climbs because their models sharpen, not because your actual risk changed overnight. You are playing a game where the other side updates its strategy constantly, recalculating, refining, tightening the odds in their favor with every quarter that passes. And you are expected to hold the same hand, unchanged, for a decade or more. Here is the moment that changes how you see the whole board. The people who stay ahead of this, and there aren't many of them, don't treat insurance as a purchase you make once. They treat it as a position you manage. A pilot doesn't check altitude once during a 10-hour flight and trust it for the rest of the journey. They check it constantly because conditions never stop shifting underneath them, wind, weight, pressure, all moving while the instruments keep talking. And they don't wait for turbulence to look at the panel. They check it precisely because the sky feels calm, knowing calm is exactly when drift goes unnoticed the longest. Your financial altitude works the same way, and almost no one is taught to check it. There's a deeper cost hiding underneath the obvious one, and it's the one that should actually concern you more than the shortfall itself. A policy quietly out of date creates false confidence, and false confidence is what stops people from building the other layers of protection they actually need. You stop saving that emergency reserve because you think the policy has you covered. You stop reviewing your numbers because the paperwork is out of sight, out of mind, filed away with the tax documents nobody wants to touch. The real damage of a stale policy isn't only the shortfall itself. It's everything you quietly stopped doing because you believed, without checking, that you were already safe. And this is where the entropy compounds again, in a way that feels almost cruel. The longer a policy sits untouched, the more decisions get built on top of the false assumption that it's still accurate. A mortgage taken on with the wrong number in mind. A retirement plan that assumes a safety net that's thinner than it looks. Each year adds another layer on a foundation that was never rechecked, until the whole structure is resting on a number nobody has verified in a very long time. So what does the other side of this table actually look like? Not paranoia, not constant fear scanning every fine print clause for a hidden trap. The people who win this long game do something almost boring. They schedule a review. Once a year, sometimes twice, they sit down and ask 3 quiet questions. Has the real cost of replacing what I own gone up since I last checked? Has my life changed in a way the old numbers never accounted for? A new home, a new dependent, a new income, a renovation that raised the value of what's under this roof. And does this policy still reflect the actual value of what I'm protecting, or just the number that felt right several years ago and has been coasting on inertia ever since? That's it, that's the entire correction, not a dramatic overhaul, not fear-driven overspending on coverage padded far beyond what's needed. Just closing the gap between paper and reality before life forces you to discover it the hard way, in a driveway, with a contractor's estimate in your hand and no time left to fix it. There's something almost freeing in understanding this. Once you see the mechanism, the slow drift, the frozen number against a moving world, the quiet math working in the background whether you're paying attention or not, the anxiety of not knowing disappears. You're no longer hoping the paperwork in the drawer is enough. You know exactly what to check and exactly how often to check it. That single shift from blind trust to active review is the difference between a family that discovers a shortfall in the worst possible week of their lives and a family that never has to because they were already standing on solid ground. The table never closes. The room full of people running the numbers never stops running them. But you don't have to sit there blind, hoping the hand you were dealt years ago is still good enough today. You just have to look at your own numbers as often as the people who wrote the contract look at theirs, because they never stop looking at yours.